Okay, this is part 3 of the False Breakout trading strategy video series. In this video we're going to go over support resistance for false breakouts only. Going to look through some examples and the objective considerations we need to just take into account when analysing and evaluating a potential setup. Before we do that, it's important to get across that I'm not a system trader, I'm not a mechanical trader, I'm not a rule-based trader, okay? I'm an objective and logical price action trader, and by that I mean I look at certain things when pricing at certain areas and I use that information to reach conclusions what price is more likely to do next in terms of risk probabilities, and if it meets my risk tolerance then I'll be looking to take a trade. I don't sit here with a list of rules. If A happens, do B. If this and this happens, then do that. That's not price action trading, that's system trading. And although system trading and rule-based trading or mechanical trading are all the same thing, although they can make you money and there's certain systems out there that do have a positive expectancy, it's not as efficient as looking at the here and now. A system-based strategy is designed to work over the long course, i.e. is based on an average of what will work, whereas an objective logical trader will look at what's happening here and now and apply the concepts and knowledge they have to this current situation, which is a much more efficient way of trading in terms of expectancy than using a system or rule-based type approach. Okay, so the objective considerations for SRFBs, okay, is to set up at a clear support resistance zone. Pretty obvious. We have to have a very clear support resistance zone. The clearer it is, the more time frames it's present on, the more people are looking at it, and therefore the higher the order flow concentration that's going to exist. Okay, is the market strongly trending or ranging? Ranging markets will produce the easiest to spot setups. Okay, you haven't got the problem of supply and demand consumption as you have in strong trending markets, and that's more so for swing FBs, but it can apply also to SRFBs. Is there clear build up of stops? Okay, it's pretty obvious. We have to have a clear support resistance. We have to have a location where we can conclude that there's been a clear build up of stops, and if there's been a clear build up of stops, there's more likely to be a clear buyer seller trap there. Bull bear trap, false breakout. Okay, false breakout to trigger breakout buyers or sellers. Okay, breakout order flow. It has to have those stops, and they have to have the breakout orders there for the false breakout to materialize, because we need that order flow. The stops help cause the breakout rush, which helps provide liquidity for the institutional buyers, sellers. The breakout orders help put people on the wrong side of the market, and then bailing out helps give us the order flow we need for the actual trade itself. So you have to be able to look at a setup and conclude, is this an area where breakout traders are looking to go long short? Is this an area where there's been a build up of stops? Okay, we are then looking for a material false breakout, and I went through in the last video the reasons why, or a fresh supply demand zone that price is hitting and forming the false breakout. Okay, is the setup the result of an FTB? Okay, I'll come on to an example of that in a minute. Is there uncertainty over whether the FB bar is supply demand consumption? Again, I spoke about that in the last video, and that's something we need to be asking ourselves when looking at a setup. Okay, and do we have a pause consolidation SR test just before the FB? I'll come on to that in a moment. So we take a look at an example. This is an example of price. We have a clear SR. Now this is one where, ignore this supply for the moment, we look at this and say, is there a clear build up of stops? It's not the most obvious because there's not been multiple touches. This is the FTB back to this area. Okay, so anyone short is likely to have their stops above here, but it's not as if prices come back 3-4 times and hit it, so there's not a big build up of stops. And likewise, there's not going to be a big build up of breakout order flow concentration, but it's still a clear SR and price is coming back to it. Okay, now this is actually an FTB setup. Okay, it's an SR, price coming back to it in an arc like fashion. It's an FTB setup. Okay, now price overshoots, we have a strong trending move into it. Okay, so that means we need to be wary about potential supply consumption here, and you can see what happened here. Price tested it, reacted, so this confirms This has an SR as a decision point within the supply demand within this SR. Then we have the lunge. Price hits supply. These two bars here tell us, and we've got history as demand over here. So this is supply, this is the institutional money. We have a very strong rejection. It's a material false break, hitting supply, strong rejection below the SR. The SR was confirmed by this reaction here. So we can conclude that this is more likely to be a true rejection and thus a false breakout rather than supply consumption. So it's about weighing up the setup as a whole. We're not looking at point scoring or anything silly like that. Just looking at it as a whole. Yeah, it's not the best setup in terms of obvious location for breakout traders and stops. Yes, the move into it isn't ideal, but what happens at the actual area and what is located above is what makes this a good setup. Clear supply, material false break, pause before we have the lunge, the false break, very quickly reverse, good close below the SR. That tells us this is likely to be a false breakout and price is more likely to continue down with momentum than this being supply consumption another leg up. Another example of demand, we have a clear SR. Now this time it's easy to conclude that there's going to be stops cluttered below, stacked below here, and there's going to be breakout orders stacked below here. It's an extremely clear SR with multiple touches. We're coming back for the first, second, third, fourth, fifth touch. But what most people won't see is there's very clear demand down here which hasn't been tested yet. This is the FTB back to this demand. So this false breakout is a two, you know, if this is a H1 time frame, this is a H2 false breakout bar. The FTB is confluence to the FB. Okay, the FTB occurs, it then results in a false breakout. Price moves down, it's quickly rejected. This is a material false breakout, and it's to where we expect it to go. You wouldn't expect the price to be coming down here, and it would be concerned if it did, because it means it's consumed all this demand down here. So we expect price to go to this demand, so we don't need to be worrying ourselves whether this is a sizable false breakout because it's hit institutional demand. Okay, it's been instantly reversed, which is what we need to happen, because you need breakout trades to be caught on the wrong side, so therefore the element of surprise is important. So it's not as if we're waiting for price to, you know, consolidate down here and then close back above. It's got to be instantaneous on the next bar, this bar or the next bar. So this is just a, you know, a 2-bar setup. It's the same thing though. Extremely clear SR, and you see price moves back up to the range highs and then back up to this supply within here before holding again and then making a new high. Okay. But we don't always have very obvious clear supply demand like these two examples. This one in particular is extremely clear. This is a rally-based rally. The source of the break higher is very clear. This is, you know, an A+ setup, it's golden setup, as good as it gets really. But we don't always have situations where we have this demand, so we have to evaluate it on the other objective considerations. Here's an example. Yeah, we've got demand in here, but there's no, you know, it's not standout like it was on the other example. You'd have to investigate this further and look at the decision points, but it's not obvious like it is the other examples. We have a clear SR though, we have multiple touches, so there's going to be a clear build up of stops below this low here. There's going to be breakout traders looking to go short. Price is moving sideways. We're not in a, you know, strong trend. We haven't got strong impulsive moves into it. It's just a sideways moving market, which is extremely good for a support resistance false breakout. It makes it much easier to conclude that this is more likely to be rejection than demand consumption. We have a material false break. It's not, you know, tiny just below here. It stands out as rejection, you know, relative to the whole picture. And as you can see, price moves up with the good momentum it should. Another example, clear SR, multiple touches. We have this pause as price tests it, gets a small rejection, then we have the lunge up. It's a materially good size rejection. It's not, you know, 1-2 pips, if depending on the pip scale on this chart. It stands out. And the important thing to look at as well in terms of rejection isn't always about the size of the false break. Yes, that's important because you need to needs to be able to conclude that stops have been hit and that the breakout trader orders have been triggered. But if you look at the rejection on this bar in terms of where it closed, it didn't close right at the SR. It's a material rejection in terms of the whole bar relative to, if you look at the strength of the buying up to this test, then we have a consolidation as price hits former supply, turn demand along there. Then we have decent buying again. Okay, it's not in the same vein as this, but it's still decent buying. It's not impulsive, but it's still decent buying strength. But this is obvious rejection. We have the false break, and we've had a strong close in terms of price has consumed all the demand within here, and that stands out. And again, price comes back to those lows. Now, this example also explains what I mean by, if I go back, do we have a pause consolidation SR test just before the FB? This helps us, and this example explains it quite well. It can be used to explain it quite well. If we have the pause and test, this confirms that this is still an SR. It still has significant order flow. The pause and test is rejection. Okay, price is rejected from the supply, the resistance, but it's just acted to consume it for the breakout higher. But because this is supply within this resistance, and this test confirms it's still to be supply, when it breaks, that supply then becomes demand on the way back down. So this tells us when price breaks through this demand, and actually this one closes much lower, it consumes supply, turn demand within here as well. That tells us about the strength of selling. Okay, we don't have clear supply up here to tell us that price has hit institutional order flow, but the fact that we've broken through this demand within here tells us that the selling strength must have been strong, especially when we're going against, you know, overall strong trend, strong buying. Okay, so I've zoomed in and just explained it here. Supply becomes demand. Demand has to be overcome on the way down. The fact it is overcome, the way it's overcome in a big rejection bar, tells us that this is strong selling. Okay, and it tells us about the selling strength, the supply strength behind this bar. Okay, and this is why it's not for this video, but one of the entry techniques is to look for a retrace. It doesn't happen on this occasion because the close is actually quite materially lower than the SR, but often what you'll find is price will come back and test this SR before moving lower, because that's now acting into supply again, resistance again. Okay, supply turns demand, demand consumed or ignored becomes supply again. That's why you see the pause, lunge, well, you see the pause, confirmation of a DP, decision point, and supply, down, breakout, consumes the demand there, and then retest to go down. Okay, that's more for another video, but that's what I mean by the pause and retest. And it's more helpful for swing false breakouts when you might have the pause first. If you have a strong trending move in, you have the pause, which confirms it still has order flow at this area, then the lunge. Okay, so just to recap, clear SR, trending or ranging market. Ranging is always going to be preferential to a trending market in terms of going against a strong overall trend, or a strong, more importantly, a strong immediate impulsive trend. We always have to be able to conclude that there's a clear build up of stops and there's a clear trigger of buyout, breakout orders. Okay, asking ourselves, is this an area where stops are going to be built up? Is this an area where breakout traders are going to be looking to trade? Okay, do we have FTB confluence? Okay, we don't need that for setup, but it's just confluence. It helps us to form an opinion of the overall setup. Okay, asking ourselves whether there's supply demand consumption concerns over the setup. Okay, price hitting demand avoids these concerns, as does a material false break. Okay, so now to look at a couple that didn't work. Clear SR. We can clearly see there's going to be a build up of orders below this. Is standout SR, it's pretty obvious, but this false break is pretty small. We haven't got obvious demand. If anything, you'd be looking for price to hit this area down here. It's a small false break combined with strong recent selling. Okay, it's not an overall strong trend, it's sideways moving, but the force with which price moved into this area does give a cause for concern. And in my last video I said what we want to avoid is strong selling or impulsive moves combined with weak false breaks, and this is what that is. It's a weak false break combined with strong impulsive move, and as you can see, it doesn't do anything. It fails. Literally, this is demand consumption. Rejection from any demand, comes up, paves the way for a move lower. And with a setup like this is where there is uncertainty. You can't really conclude with good probability that this is a false breakout setup and most likely to cause price to move higher. There is certainly some concern here about that this could just be demand consumption because of the strong move into it, and combined with the weak false breakout and no other, there's no obvious demand that price hit. Okay, if anything, you'd be looking for price to cause a false break after hitting this area down here, this demand within here. Okay, doesn't mean it's not tradable, doesn't mean someone isn't going to trade it, but it's just you have to be able to reach that conclusion that there is concerns here, there is uncertainty regarding this setup because of the demand consumption relative to the other ones we've looked at, and therefore, depending on your risk tolerance, you either wouldn't take it or take it with lower risk, etc. Another one, fourth time back to an SR. You can't see it, but there was no clear demand to the left. Again, impulsive move down. Okay, it's a sideways moving market with a recent downward trend, and there's been lack of rejection after this test, which again tells us something about the setting strength here. Strong rejection doesn't lead to any follow through at all. It's up to this supply within here and this flip area. Price comes down, very strong selling. Okay, it's not obvious to expect strong selling here. It's not as if a move below these lows is an obvious breakout area, so you don't expect a breakout rush here. And we have a pretty small false breakout. It's not the smallest you'll ever see, but it's still pretty small relative to the overall picture, which is a strong selling. If I want to be trading this bar, I want to be seeing a very strong rejection from a much lower low. So from down here to tell me that we have actually had a decent buying strength coming in here. Either that, or I want to see demand to the left. I want to see a pause. The pause, then the lunge, to confirm that this is still support and still has some demand strength there, which will turn supply, which will turn demand again, as I just described on a previous slide. So there is uncertainty here. You can't look at that and say, yeah, that's a false breakout, it's a rejection from some demand, it's going to go higher. It's not maybe 50-50, but it's more along those lines. There's increased uncertainty because of the strong selling and because of the overall picture, the lack of other information to tell us that whether this is demand consumption or true rejection leading to a false breakout. Okay, so that concludes looking at support resistance false breakouts and the considerations you need to take into account, the objective guidelines that I use when I look at a setup. Okay, as I said, I'm not a rule-based trader. It's not if this does that, we do that. That's not efficient price action trading. Okay, got to look at things and analyze the whole scenario. Okay. The next video we'll look at swing false breakouts and the same type of things, the same objective considerations, and it should be quite clear to people by now that swing FBs are going to be harder to evaluate. It's harder to reach, to be confident about swing FBs generally compared to support resistance FBs. Why? Because a swing FB will always have more question marks over supply demand consumption, because you haven't got the multiple tests. You haven't got a sideways moving market for the most part. You'll always mostly have a U shape or an inverted U, so you will probably have price coming back with good momentum. Okay, and obviously it's a swing low, then coming, it's like basically having this as a swing low, then price coming back again. You haven't got the recent test in the sideways moving market, and if you're going to new highs or new lows, you're not going to have the supply and demand to confirm to you that price is hitting institutional order flow to assist you. Okay, so the type of setup like this one, for example, this is my bread and butter. That's a high probability setup. That's much higher probability than any swing false breakout will ever be, because there's no concerns over supply demand consumption here. There's no strong selling, it's just a lunge down after breaking this breakout area. It's hit clear demand, it's a very clear SR, it's got a great build up of stops and breakout trader order flow. It's extremely high probability setup. Okay, the same with all of these. This one's not as good, but it's still a good probability setup, and it's much easier to be able to conclude that something's a false breakout on an SR type setup than it is a swing false breakout setup. So for me, I always risk more on SR false breakouts than I do generally on swing FBs, because it's harder to be as confident about them, because you don't generally have as much information to hand. Okay, but we'll go on to that on the next video.